Ultimate Options with Corey Halliday, ladies and gentlemen. How you doing, Corey?
Doing great.
I'm so stoked. This is going to be fun. We're just, I think this is the last class before we trade an option. I think this is the last one. And this one,
but a very important one.
This one was more about trying to head off questions before they come, really. Because after we show all the criteria, all the stuff we do, well, how do I find this needle in a haystack? How do I go about finding all this stuff? You know, I mean, I'm looking around here. Where's the money at? How do I find them, right? So we're going to talk about finding candidates. And, of course, we are educators. We're not advisors in this role. And there's risk to this stuff, so be smart. Okay, how do you find stocks? Real quick. This one's going to be a faster class too. Why? Because I'm stoked to get to options, okay? So hopefully, you know, you've watched some Mentor Club and you get an idea of the process to find some of these. But let's just hit it real quick, okay? So we do what's called a top-down analysis. Now, what does that mean? Well, like a lot of people, I used to do a lot of seminars, you know, years and years and years ago. You know, I used to travel around a lot and teach a lot. And, you know, I'd go with Robert Kiyosaki. I still do that once in a while, but not as often as I used to. And people would come up to me and they'd say this: what do you think of Bitcoin? Or what do you think of Amazon? Or what do you think of Tesla? Or what do you know, and all these up and coming companies, you know, back in the day, what do you think of eBay, right? What do you think of Micron? And you can go back years and years, no matter how far you go back. You know, what do you think of U.S. robotics? You know, it doesn't matter how many years you go back. People would always ask about a specific company, and it's kind of like Mad Money with Jim Cramer. Is they go and they throw a stock at him. Hey Jim, what do you think about IBM? Sell. IBM, get out of here. You know, it was entertaining. And it was fun, you know, oh yeah, you know, and okay, what do you think about this? Oh, bye. You know, he had bells and whistles and he did everything he could to make it exciting, right? On Mad Money. Yeah. And he's a fun guy. I like Jim. But that's not the approach we take. We don't take it stock by stock because there's like, it's funny that Jim has to act as if he knows all about every company that comes in, and it kind of has that illusion. Of course, you got a million stocks being submitted in those shows, you know, for Jim to look at, so he can kind of cherry pick it a little bit about ones he knows about. But the truth of the matter is, here's your problem. You can't know all, you know, 14,000 stocks or however many they are. You just can't do the 4 pillars on that many. You can't. And so if you just, there is some people say, look, I have my handful of stocks that I trade and I get good at those. And I'm not knocking that. Okay. Corey, you trade ETFs, and indexes. Yep. Okay. You trade indexes, a lot, and that's your system. There's nothing wrong with that. And you can use the 4 pillars on a sovereign level to do that. You'd have to, technicals, cash flow, the whole bit. So no matter how you trade, 4 pillars are it. I mean, you can't get outside of them. They're there in every style of trading. Even the dad-blasted day traders that don't care about a company fundamentals, they better worry about the sovereign ones. So, you know, that's the big deal. But you don't go one stock at a time is what I'm saying. What we do is we use the process of elimination because I want to find candidates that I might not even known about before, right, that are outside my purview. And so the way this works is we look at the market and we develop an opinion on the market. Okay. So this happens in stages. First, we don't have to search for stocks. We bring up the S&P 500, we bring up the Russell, and we look at what the market's done. And then maybe we say we're bullish on the overall market. Okay. Then we'll pick out sectors, and there's not many sectors. You can look at, I don't know, how many in the S&P 500, like 10, I don't know, 12?
Yeah, 10 sectors, 10, basically.
Something like that. So you look at basic materials, and you look at financials, and you look at healthcare, and you look at energy, and you look at technology, and you look at, what am I missing?
Consumer discretionary and consumer staples.
Yeah. You look at those 10 sectors, that takes less than 10 seconds. You can look in a second, you can see. And maybe I say that this one I'm really bullish on, and it's what's called a leader, where it's leading the market and maybe these right here are lagging behind. They're just not as strong or whatever. So guess what I just did? I'm not looking in the wrong part of the universe for Luke Skywalker. You follow? I'm not looking in the wrong part of the universe, right? And so I've just eliminated thousands of stocks. Okay, then I say, okay, what about the industry group? So within technology, you've got several industries. Within healthcare, you have several industries. You got, healthcare, you got medical care. In energy, you have several industries, right? And so maybe I say this industry group right here I'm really bullish on, and it's a leader. And this one's just maybe lagging a little bit. So now I get to eliminate this. And then what I do is I say, all right, let's start running a search for companies. And then at this point is when I do what's called a scan. And this is where the computer takes over. So I do this manually. Maybe I start using the computer a little bit. Maybe I look at some rotation of money. I look at something called sector rotation. Maybe I see money rotating into a sector, or group rotation, money rotating into group. They call that the smart money. Institutional money is rotating in. At this point, I use the computer. I'm going to do a scan, and then I can just go, nope, yup, nope, yup, nope. And now I have 1, 2, 3 candidates that I can start doing my 4 pillars on. 4 pillars. Whoop, I just did poor fillers. It's not poor fillers, it's 4. I had a peach impediment right there.
We can do pillars. 4 pillars on these poor fellers.
Yeah, I'll tell you what, 4 pillars on the poor fellers. Get me going, I might swear or say something bad. So now I've eliminated, right? I've been eliminating this really messy slide, and I have this pathway of the market to the sector, to the industry group, to some candidates very, very quickly. Now, maybe I'm a bear here. So I would do the same thing. Okay, here's a bear. Let's get rid of these, right? And then go with this one and then pick these out. So it's this process of elimination that we get good at, or hope to get good at. And, when I develop my opinion on the market, first I want to have a market opinion before I search, okay? I'm going to do the market opinion before I search. Then I'll look at maybe a sector rotation and see what money's rolling into a sector. Sometimes I do a group, sometimes not. It just depends on how much time I have that day. And then with the company, we really hit the 4 pillars in all of them. And on the company, I developed what's called a stock opinion. And it's my stock opinion that's going to be based on the stuff we did in the last session, all the fundamentals analysis. But on all 3 of these, you'll notice there's one trend, no pun intended, but there's one trend that we want to trade with the trend. The trend is our friend. So,
yep. And what's interesting about this, you mentioned this before, you can actually stop your search sometimes just on the market. If you have a really strong opinion on the market, like Andy said, sometimes we'll just trade that. So we'll trade SPX or RUT or some of the ETFs, and we could just stop it on the sector, and we could say, you know what, I really like energy here, and I'm just going to trade the sector. So I'm going to trade XLE, which is the energy ETF or something like that.
Yeah.
And so now my trade is, I've got an opinion on the market and I've got an opinion on energy. I mean, I could take trades that way where I'm trading a group of stocks all under one trade, under one transaction through these indexes or through these ETFs.
And
if we want to go more specific, there's a great way to go into the companies as well.
And I bet if we open up Corey's computer right now, I would guarantee we'd see a trade there. There's going to be a trade there every time. And there's probably a couple of trades here, and there's probably a couple of trades at this level. I'll bet you've got all 3. If we open up your computer right now, I'll bet I'd see this. I'd bet my bottom dollar I'd see this because I know how you trade.
Well, interestingly enough, I also have QQQ, which is right below that.
Yep.
And then
and so
you look at it from, and I have a sector trade on. And I've got some company trades on, so there you go.
So you got a nice mix.
You know me well.
You got a nice mix, okay? You got a nice mix. Yep. Now, software to scan. When you get down to this level, you're going to start using software, right? When you get to that level. And I'm going to say the same thing I always say, because everyone says, which one's best? Which one's best? I'm telling you, it's like picking a car. Okay, I'm going to go back to the same mantra of I don't care what software you use. Look, I can drive either of those cars, and Mario Andretti can really drive either of those cars, and Jeff Gordon can really drive those cars. Other people I know who will go unnamed, members of my family, they get behind the wheel, and it's just like there's no chance. I was surprised. My coach Rick Majerus did die of a heart attack. That's what everyone thought would happen. He had a bad heart. But I swear, I thought he was going to die. And that guy couldn't drive. I mean, I've got stories I could tell, and other players I've consulted with that can have that guy. I can't believe he made it without a car wreck. But anyway, funny stuff. So the platform you use to search for stuff, isn't a real big deal. So let's start here with some demonstrations. Let's get out of theater mode, and we're going to use two. Just for example, we're going to use FinViz, we're going to use Yahoo Finance, because these are free. What are the problems with using ones that are free? Ads pop up all over the freaking. You can't go. These guys right here, you can't go like 5 seconds on this thing and then whop, something comes up and you got to shut it off. So I have an account with these guys. I'm not going to log into it necessarily, but that'll take the ads off if you want. But you can use Thinkorswim. You can use Interactive Brokers. Every brokerage has tools to trade or to search for. The key is knowing how to search for the right stuff once you get there, right? How do you search for the right stuff? So with that, let's start with Yahoo right here, and Corey's got a little value screener here that he's used, and he has 1, 2, 3, 4, 5, 6, 7. Let's see, 1, 2, 3, 4, 5, 6, 7 filters on this, and they correspond very closely to this stuff, right? To this stuff, yep. Pretty darn close.
Exactly right.
So, yeah, there's your EBITDA. In fact, you have this thing. I had to correct this before. Enterprise value.
EV to EBITDA. Yep.
To EBITDA. And so right here is he says, I only want U.S. stocks. Okay, so that's fine. So that's going to find stocks that trade on the NASDAQ and on the NYSE. He says, I want large cap and mega cap. I want big stuff. Now, tell me why you want big stuff.
Yeah, liquidity is a big one, because when you start trading small caps, there are going to be smaller companies and they're just less attention is paid towards them. And so one of the biggest mistakes that I see people make early on in trading is they just trade any and everything. And they're not shortable, they're not optionable. Or if you want to trade it, the bid-ask spreads, the difference between where buyers and sellers are willing to trade are so wide that it's just kind of a ripoff. Once you get in, once you get out, you're losing money. So liquidity is very, very important. And if you deal with the larger names, that's going to be more important for you.
And this is an options course. If I'm going to trade options, well, my gosh, my good gravy. I don't want stocks under $5, because if they're under $5, I'm going to buy the stock instead of the option. And I got to tell you, I even like 10. I'll even go to double digits on mine. Okay, now here we've said, hey, here's the sectors that we like right now. So we've already gone out and we've looked at the sectors and said, okay, some are outperforming others. And that's pretty easy to do with just the chart. Often is you look at a chart and, one looks like this and the other looks like this. And, one's on its highs and one's off its highs. And maybe one's ready to pull back and go to the next level. It's sitting right here and another one's clear down here. So generally, most sectors, there's some broad market to it, but you'll find laggers and leaders all the time. Anything you want to say about that? On the sectors?
And when you scan these, this is a fundamental screener, so understand that sometimes your sector might be strong, but the stock could still be weak. So just because it pops up in my scan as a fundamentally strong business does not guarantee that I want to trade it, because I might look at it and that chart's horrible and it's in a downtrend and is showing no signs of stopping. So, you're filtering it down. It's making it a whole lot easier, and I can just go and with the click of a mouse, I can run the scan every day. But I still need to do a little bit of work of, okay, now I go to my technicals, my fundamentals I've done with the pre-built scan. Now I go through the charts really quick, make sure that the technicals meet my criteria.
I said also, and maybe I should bring this up, I said that with technicals, I'll just bring this in right here. And the last thing, that you can do the market, the sector, the group, and the company. Market, sector, group, those are really the areas you can look for stuff in, okay? So right here, we've done the sector, but we haven't gone with the industry group. And you can call it the group. Sometimes they call it the industry group, and sometimes they call it the industry. And just understand, the industry is a subset of the sector if you want to go there. So maybe, I don't know, what would be a good example of that?
Well, yeah. So if you had, for example, energy would be the sector.
Right. Oil.
Industry groups would be things like oil services,
like OIH
exploration and drilling. You'd have natural gas companies. You'd have oil companies. So there'd be a wide array of different styles of energy.
In technology, you got chip makers and you got software. Stuff like that. Yeah. Some people do software, some people do chip making. Apple's now not a technology, it's retail. How hilarious is that? So there you go. Okay, here is our the enterprise value over the EBITDA.
EV to EBITDA, which I like less than 10. That tells me it's stronger.
Less than 10.
Yeah.
And then we have our PEG ratio.
And you can build these scans to be negative as well, of course. And then we want, bearish.
So here's our this is what we talked about, right, in the last segment, where we can go with, less than this, or you can go greater than 20, right, or whatever.
Yep, exactly.
And then, or you can set a range right here, and then we've got our volume of 1 million. So we've covered all these bases now. So instead of looking at a stock and saying, does it fit all this criteria, or not, right? Does it fit all this criteria or not? We can simply run a search and say, no, we're going to use a top-down approach and just say, look, find stocks only in this sector, only in this group, and only companies that have this fundamental quality. And so
you can duplicate this at Yahoo Finance. The button is just, you just click on My Screeners and you build your screen. Save a screen right there.
Boom. So. Yep. Off we go. So that's it. Okay. That's it. You got 20 candidates right there. 20 of them.
There's your 20 list.
Yep. Now the next step would be, so now you got your first pillar down. The next step now would be what, Corey? To go look at their
pull up those charts.
Yeah. Go bring up those charts.
It fits.
And
this is a bullish scan. This is a bullish fundamental scan. So we'd want a bullish price chart with it. And if we'd done that, then we have a bullish fundamental outlook, a bullish technical outlook. We're on the right path.
So here is FinViz, and you see that, let's just put them all up here. You can get descriptive things, more importantly, fundamental and technical. So there's the two pillars. You'll always see them right there, fundamentals and technicals. 2 of the 4. Let's just bring them all up here. So in this time, we had market cap just like before. We had volume over 1 million just like before. We decided to make them optionable and shortable because we had this option here. We had PEG here. We didn't have an EBITDA on this one. Okay, so that's fine. But we could do, we do have large market caps here. So that's not quite as good a valuation, but hey, we got large cap stocks. We've got an earnings day added to this one, though, which helps us find stocks that only have earnings in case I want to do a strangle. If I want to take this off and say any, it's going to give me a lot more choices here. Okay, so see what I mean about ads on this. So that's kind of how that works. Now look, see how I can mouse over. Now I got my chart. Now I got my chart. Now I got my chart. And this is how I usually do it. Now I got my chart, depending on what I'm looking for. And if I was bearish, that's definitely a candidate, right? If I'm bullish. And I can sort by volume if I want, right? And now I can go for stocks that are, really killing it. So here I got Micron Technology. See what I mean about the ads every 10 seconds if you do these free? Just don't be cheap. Go and buy some, okay? So then I can decide if I'm bullish, what am I going to look for? Because now, see, this one would catch my eye. And the reason this one would catch my eye is it probably just had an earnings date because it had a big drop right there, and it's got big volume on the downside. And often I might take this chart and open it in a new tab or something. And this is not a fundamentals class, but often they'll fill the gap. And so maybe I'm interested to put this in a watch list to say, hey, maybe this fills its gap. Maybe they're just, I'd have to do more investigating. Okay, no. See how fast I can do this? No. A lot of these are good fundamentally, but they're struggling on their chart side, right? No.
Yeah,
no.
And I would add a note that the market can dictate that. So when markets are down, it's going to pull a lot more things down with it. When sectors are down, it's going to pull a lot more things down with it. So, there might be really good bearish candidates right now if we were doing the scan that way.
Yep, absolutely. So we're looking, there's another gap filler possibly. And I can just go over the top of this and find stocks. So here's one that looks like this one's bouncing up against some resistance, and see how it's pounding up against the ceiling. So maybe I put that one on a watch list if I'm bullish. I might go back in time and see if there's a cup and handle on that one, and so okay, I'm putting that one in because it's at new highs, right? And I just developed this watch list to where I begin to narrow down what these guys are doing, okay? What these guys are doing, and I can just go through this very, very quickly, and off I go. So
and notice how, as he was scanning through those, he would pause on the ones that just simply had the upward trend. Yeah. We're looking for bullish price action, so the price chart should be moving from lower left to upper right. If it has that, notice he pauses and he says, I might give that another look. I'll add that to my watch list. These that are in a downtrend because we're doing a bullish scan, we'd be less interested in.
Yeah. See, now this one I really like because if we were to if you were to look at that at $23, okay, at $23 I have had resistance, and now it's coming back down to that area where it could act as support, and I have I might be interested in that maybe, stuff like that. And
again, it had an overall trend that had been sloping upward, even though it was in a little pullback. That can just be a nice bullish pullback in an uptrend. So
now, and you can run fundamental scans as all. You can run signal scans like this, where you can get like, okay, instead I want everything. Maybe sometimes I'll do it in the other. I'll do it in the other order. Sometimes instead of doing these scans right here, I still want optionable and shortable on there. Isn't it just irritating? Maybe I pull off a peg under one right here, and I just start off big with optional short, and maybe I say I want everything that has an ascending triangle on it. Did I tell you those ads hit every 5 freaking seconds? Did I tell you that?
Yeah,
it's amazing.
FinViz is the
They've
worst
gotten
on their
so
free
bad
stuff
anymore. Okay, this is an ascending triangle that already broke out. So if you miss the pop, wait for the drop. I still might be interested in this one, because even though it popped above its 79, it's got resistance at 79, had the ascending triangle popped up, it's headed back down, and it might retest that level, and that resistance could become support. So I missed the pop, but I might wait for the drop on that, okay? And let's see, I thought I had one of these that I wanted to talk about a little bit, but not a big deal. Where'd that go? Okay, that one has had the pop and had its drop. This one is ready to pop, right? And so there's a lot of candidates in here. Now you'll notice how I'm not that picky. Okay, I'm not getting out my ruler and my lines right now. I'm not that picky because there's a lot of wiggle room in this stuff, and it's really my risk management. I think a lot of people are looking like they want to marry one of these stocks. Now look, if you're looking for the perfect spouse, do what Corey and I did. Marry up, find one that's perfect, and get them. That's what we did. We were picky there. But the girls that I would date, I have to admit, she looks like fun. Let's take her out for a while. Choosing a girl to date or ask to dance is a lot different than marriage proposals. Hey, you know what? I'm looking for a girl to dance with right now. You know, or you know, if you're a girl, you're looking for a guy to dance with. That's it. It's just a dance. It's nothing big. There's no commitment. It's like that thing. It's just lunch, right? It's just lunch. And I'm not going to freak out. You know, I'm going to pull a few candidates up. And right there, I've probably got 5 or 6 that I'll put in the watch list. And at that point, then I'll really start looking at the company and how it works. Any other scans you want to look at? Anything you want to do? What are some of your favorites here?
Yeah, so, you know, you can do some of those Head and Shoulders, and they, you know, if you were bearish, you could do a double top or a Head and Shoulders pattern or something like that, where the trend's kind of reversing. And so let's say that you were bearish on it, Head and Shoulders pattern would be a topping out pattern. And you can kind of find something that might be forming those. And so
there's the Head and Shoulders. You know, there's the Head and Shoulders that already had its kiss goodbye.
Now, admittedly, sometimes you're going to pull these up and you're going to go, I don't see what they see. And that's okay. I mean, the scanning is designed to make it a lot quicker for you to find your candidates. Sometimes they're going to be spot on. Their price pattern searches are going to find a great candidate. And sometimes you're going to go, I don't really see that.
That one's already happened. Yep. Now that's an ink blot there. I don't see a dang Head and Shoulders in there at all. I'll tell you that is one though. So, you know, as you get better with technicals, you know, you'll see more of these, and you got PEs right here, market caps right here. You can say, hey, I want to sort by PE and get one with the lower PE. These are some killer PEs right here. Did I just see an ad for robot babysitters? How frightening is that? Holy moly. Okay, so these have really low PEs. Of course, with a Head and Shoulders pattern, that's a bearish pattern. So we might look at some that are really expensive, you know, and see what we can see. So there you go. So searching for stocks is really not that big of a deal. It's not. I think we'll make it a bigger deal than you want. Yep. So that's it. So pretty easy. Anything else you want to add to that? I mean, there's so many scans, so much stuff, but it's really not that hard to do. People make it a lot harder than it is because they feel like
that's exactly right.
They feel like they're going to have this epiphany, like that's the one, and it just, you know, it doesn't work that way all the time.
Yeah, I agree. I've noticed in my own trading that the amount of time that I've spent searching for candidates early on compared to later in my trading,
it's a tenth.
I'm just going to save you. I'm going to save you a lot of time. You don't need to be scanning constantly and thinking that you're going to find the perfect chart and that's where all your money is going to be made. Because, you know, a good analogy is when you invest in real estate, it's location, location, location. Yeah. When you invest in business, it's people, people, people. When you invest in the financial markets, paper assets, it's behavior, behavior, behavior. That's what's going to matter most, much more than the perfect other chart stuff or the perfect fundamentals. It's how are you going to manage those trades? That's where your money's going to be made. So, you know, these are great tools and they'll certainly speed up your process, but the work should be on really refining you, having the right mindset, journaling to make sure you're doing good risk to reward, position sizing. That's what's critical to your success.
And, you know, I'm proud of my wife because she's like perfect in every way, and she just get more and more perfect. Is that an oxymoron? How do you get more perfect? Because if you started perfect, there's no room for improvement. But, you know, one of the things that she's gotten so much better at is, you know, she's a little scared of the computer. And she was the type of person that would come to me and says, Andy, how do you print this out? Or how do you do this email? Or how do you scan this document? Or how do you do this? And she felt that she needed to know it before she could start playing with it, right? In a serious way. I really say that don't be scared to play with this stuff and practice it. So we use a top-down approach. Yeah. That way we take what the market gives us. We don't force our trades, and we don't go bullish in a bearish market. If the market gives us bear, we go bear. We go bear. How about that for the Utah Jazz fan?
Yep.
If the market gives us bear, we go bear. No one understands that. Oh, well. That's a shout out to you, Rudy. Rudy Gobert. Apply the 4 pillars to the market, sectors, group, and the companies. Narrow your choices down by the criteria. And as always, look, platforms present the same data as we saw in just a different form, right? Just the same data, pretty much just a different form. But if we know what to look for, PE, is it shortable, price, right? What's the volume? We have this pretty much the same stuff here as we did here, minus EBITDA. And there's other fundamentals you could put in to replace that, just to make sure you're getting a good fundamental stock. Awesome job, Corey. A lot of fun. Thank you for joining us. Guess what we're going to do? You're now done with the tools section. Congratulations. It's time to trade some options. Let's go. Let's go after it. Let's go do it. We'll start with puts. All right. Thanks.